Hey, good morning. Let's go over today's trade plan. So as we've seen in the overnight session, the buyers have been more dominant and are attempting to stage a breakout. On the upside, we have pre-market resistance 25.5 to 26.5 and initial resistance 28.75 to 30.75. These are pretty important inflection points in the market, and for that reason, we do have to be a bit cautious buying at these really aggressive prices because we need to see the underlying strength to really support a sustained breakout above 28.75 to 30.75. Otherwise, if there isn't that underlying strength and the upside momentum present in the market, then at least the initial attempt to break out above initial resistance and pre-market resistance can fail, and the market may balance a bit more prior to actually having a sustained breakout. At least that's been the pattern recently, where the first breakout is typically not the successful break. We're seeing first the breakout tends to fail a bit, and then after balancing for a little bit more, it tends to go higher. But in any case, we do have to be a bit careful at these higher prices. It doesn't mean that we can't break out. The overnight session has been pretty bullish, and the market is definitely gearing up for an upside move, but we just have to see whether the market environment, once the market opens, whether the underlying strength is really there to support a sustained upside breakout. Now, in the event of a sustained breakout through pre-market resistance and the 28.75 to 30.75 initial resistance, we can quite easily get a move up towards 36.38, 39.5 to 40.5, and the final upside objective would be the 45 to 48 zone, and then that's an area where the market can struggle yet again. It's another key inflection point in the market, and a break above 28.75 to 30.75 would indicate buyers in firm control. So that means we do have to be cautious on the short side at the resistance zones above, because the next major inflection point would be 45 to 48. Now, in the event of a failure to break out, the first area where buyers could enter is 21.75 to 22.75, but that's really the most aggressive area. And the 21.75 to 22.75 zone is also an important reference to gauge the strength of the market. So if the market's holding above 21.75 to 22.75, you know that the overnight breakout is actually holding so far. And if we break below it, then we can get a test of 17.75 to 19.75, and that's really the main inflection point for buyers. So if that zone doesn't hold, then we could be looking at a wider range balance. Then the buyers would have to step in again at 12 to 13.5. That would be the next inflection point. So the way this market is set up, if the upside strength is not really there and we end up failing, then we can quite easily pull back to the 12 to 13.5 support, 17.75 to 19.75, and we just have to keep in mind that as we're pulling back, you're only going to want to buy 17.75 to 19.75 if there are still enough signs supporting the idea of an eventual break, right? So, for example, if the advanced decline line is completely tanking and the NYSE tick is holding below zero, and in real time, there are more negative signs than positive signs, then you're not going to want to buy initial support, because then most likely the market will go down to 12 to 13.5 before attracting buyers. But if everything is still quite bullish, if AD is holding and the tick is holding above zero, and overall the other markets are holding up well, then the pullback to 17.75 to 19.75 could be the launching point for a bigger upside move. So these are things that will need to be gauged in real time. But we are at a important inflection point. Either the market breaks out over here and we go, significantly higher, or we get a failure to break and then the market continues to balance within a range, because you can see there's a very defined sideways balance that has developed over the last 3 to 4 sessions, and the high of that is 27.25 on the 15th, and then we have the breakdown area around 28.75 to 30.75, which is essentially a low volume area. But if we don't take this area out today, then we would still be stuck in a balance. So far, even though the market has put in these little mini breakouts along the way, we haven't actually broken outside of this very defined range, right? So the market is technically still trading within a sideways range, and that's why we have to be careful, buying the market at these higher prices, because it hasn't actually broken out yet. It's setting up for it, and it's certainly gearing up for a move, but it doesn't necessarily have to be a sustained breakout, right? It could be a failed breakout attempt, and that's why you need to keep both sides in mind and not really get locked into a single view. So 21.75 to 22.75, a reference area where if we're holding above it, we know that the buy side is still intact, and we could still be setting up for a move higher. Below that, 17.75 to 19.75, still an aggressive spot for buyers to step in, but if everything is still bullish, it's a spot that we can trade. 12 to 13.5, pretty high probability zone, where at least the first test of it can result in a tradable reaction, and in the event of the sellers really stepping, then we could see 03 to 05, and that's an area that again buyers can defend, because overall this market is simply trading in a balance, so it doesn't mean that we have to go big on the downside either, and every zone along the way can still attract buyers and at least provide some level of rotation. So it's still an area where we can take a long setup and see what the market does, right? Because at the very minimum, I think we'll get some upside rotations at the support zones. So unless we're seeing big warning signs, we can still trade long, and 21.75 to 22.75, as long as we're holding that, we actually want to be cautious on the short side as well, right? Because the market is setting up for a move. We just have to see which way it's going to be. But we are trading at balance highs here, at least short-term balance highs. So, we just want to be a little bit more defensive with our positions here. So those are the main ideas heading into the day. Let's see how the market reacts to pre-market support. Let's see if there's enough strength and momentum to take out pre-market resistance and initial resistance, and we will take it from there.